Morning and good afternoon, everyone. I'm actually in New York to
Good morning.
attend the UN General Assembly. We are so honored to have this, which was arranged by Soterius as chair of the SOCSEC Standing Committee, Social Security and Occupational Health and Safety. He spoke to Jerry, and who is one of our guest speakers. Jerry Barton is the president of the Federation of Associations of Former International Civil Servants, FAFICS. So I had the honor of attending the 50th anniversary of FAFICS earlier this year. We also have as a guest speaker Marasheti Sinapa, I hope I said that right, who is the
Absolutely.
oh, thank you, Marasheti.
Perfect. Thank you.
Thank you. Who is the president of the Association of Former UN Personnel in and of India. So it's called AFUNPI.
Mhm.
And then we have Denise Gustin Gadela, who is the Chief Client Services from the United Nations Joint Staff Pension Fund, UNJSPF, which we all should know as the pension is administered. So this will be recorded and published on the FICSA website for those who couldn't attend. So without further ado, I'm going to hand over to Jerry as our guest speaker, and then Jerry will facilitate the session together with Marasheti and Denise. Please put any questions in the chat. We will deal with them after the presentations have been made. Kindly mute your mics while the presentations are being made. And so after they've given their presentations, please put any questions in the chat. And after that, you can also ask your questions in person. Over to you, Jerry.
Okay, thank you very much, Watsi. It is a pleasure to be here today. And to kick us off, I'm an old guy, so I like to give PowerPoint presentations. So I'm going to share my screen. I have just, oops. I cannot share my screen today. I could yesterday. Okay. Someone will have to give me presentation privileges.
I think Mary Paul can do that. Mary Paul, can he get presentation permission?
I can't find his name anymore. You disappeared, Jerry.
Gosh. Well, it's a virtual presentation.
Hold on. How come I don't have you're not here anymore?
Okay, I think you're a presenter now. Jerry, can you try?
Yes, I am a presenter. Okay.
Okay, thanks, Ewan.
No worries.
Thanks. Okay, so what we're going to do is focus on the fact that the people attending, that's you, are perhaps interested in early retirement or separation from your UN jobs. So we have here people from FICSA. Myself, I am the president of the Federation of Associations of Former International Civil Servants. And I should introduce ourselves just a bit because you may not have heard of us. We have 65 worldwide associations, each one of them local to a specific country or region. Our job is to support the UN principles, and we are advocates for your benefit once you retire or leave the association, leave the organization. The various associations provide information and local support. Our website is www.fafics.org for each of the association contacts. So in one sentence, FICSA is for staff, what FAFICS is for former staff. Before we get started on the specific questions, there are some overarching concepts that I think you should know. Once you leave the organization, you become a normal citizen, a resident of the country you are in. There are essentially no special privileges. You have to abide by all the laws and regulations, including getting permission for residency, and we'll be talking about that quite a lot. Rule number 2, bureaucracy unfortunately does not go away. It gets worse depending on where you're residing, what your health insurance issues are, what your pension issues are, and what choices you have about your pensions. Rule number 3 is enjoy your life while you can, work if you want, find ways to get involved. It's very important for your mental well-being, but also your physical well-being. And rule number 4 is to either stay social or become social, build community, support others outside of the organization. Too many of us, including myself, started off in retirement with a total loss of community because the community was all inside the organization. Okay. When you plan for retirement, you may discover that your passport country might not be your home anymore, especially if you've been away from home for a number of years. You need to look for things like, where can I find community? Where can I find and maintain and build physical health? Where are there opportunities for mental challenges? Your physical health and your mental health need care and attention. But also you need to look for some place where your finances are sufficient and taxes are fair. So we have received some questions in advance already. Our caveat is also, we don't have all the answers. The answers are also very individual and specific to your cases. So I hope we can provide some of the information that you need. 2 of the issues that have come up in advance already are residency and taxation. So before we go into the chat, I will start to talk about this and then give the floor to Marachetti. So on the issues of residency, some general comments. How long can you stay in the host country? Well, that depends on the host country. In Switzerland, I believe it's 60 days. In the US, it's 30 days. In Austria, it's 3 months. So it varies by country to country, and we don't have all the details. Perhaps in the Asiatic area, Marachetti might have more details. How to obtain long-term residency depends on the country again. Most of the time you need to have short-term residency that you apply for just before you leave the organization or immediately after you leave the organizations. And then you build up a number of years in the country. Some countries will credit your UN tenure. Other countries will not. In Austria, for example, I am in Austria, so I know that a little bit more intimately. It can take up to 10 years to really obtain your long-term residency, but if you have sufficient language skills and income, it can be 5 years. Options in various countries. Again, these are country-specific questions. And I don't think we can answer all of them here. Oops. Let's go back. Yeah. There we are. So before we go into the text, I'm just going to stop sharing here and go back. and say, okay. Marishetti, do you have anything general to say about residency issues?
Thank you very much, Jerry. I think you have said it all when it comes to the European continent and about US. But I had something to share about the taxes.
Yeah, go
Our
ahead.
experience in India has been that the association had to literally stage a fight with the government. I mean, that was nearly 50 years ago, the fight started.
Mhm.
But it took only 3 years, and then finally we managed to get the UN benefits, the retirement benefits, tax exempted. So since then, it's 100% tax exempted, both for the primary retiree as well as for the spouse benefit. I just wanted to share that information. Then obviously early retirement rings a bell. I know how much will I be getting? I'm not really retiring at 62. If I am retiring at 55 or 58, with so many years of contribution, I'm sure Dennis will touch on those questions later on. Then I would also stress on what happens to the MSS, for example, member self-service. I think it's very important that after early retirement, to continue, if you're getting the benefit, I think it's very important to continue with the MSS. And all of you are aware that now the MSS, one has to re-register because of the extra layer of, protection added. Then the other issue would be the health insurance.
Mm.
I think it's very important to consider also the health insurance, early retirement, what happens and what are the regulations. I think we could share that information. Thank you, Jerry. That was excellent introduction.
Okay, good. Thank you very much. Yes.
Yeah, thank you, Gabri, as well.
Yeah. Turning then to the issue of taxes, there are two questions that have always come up in advance, and one of them is, what are the tax-free countries? And the second is, can you talk about the lump sum and how that's treated in various countries?
Yeah.
Well, again, our caveat at the beginning, neither of us, none of us here is a tax advisor. We are not certified in any country to give official tax advice. And the best source for some of that tax advice is in the retiree association in the country where you are going to be residing. There's actually a Wikipedia page that is not certified in any way, but is fairly clear about which countries are tax exempt. In Europe, the only countries that treat the UNJSPF pension as tax exempt are Austria and Malta. And in Malta, you have to have a big bank account as compensation. Now, there are many more in South America, several in South America. The biggest is Chile, that has traditionally been tax exempt. And there are several in Central America that treat the pension as tax exempt. Asia has some where you then have deposited a large amount of money and then you are tax exempt, or you are not taxed at all. So it varies from country to country. And again, there are sources. I recently, just yesterday, had a question come in about what are the taxes on the pension in France. Okay. In general, the pensions are taxed in France, but to get specific information, I forwarded that message to the association based in Paris, which is AFUS.
Yeah.
And they would be on the source for that question. I have a question here that I see in the chat, a question on Austria in particular. Yes, Austria has a headquarters agreement as one of the UN headquarters locations that says all income from the UN JSPF is not subject to Austrian income tax. However, Austria, like most countries in the world, is looking for income. They are not trying to change the headquarters agreement, but they are trying to interpret the headquarters agreement. One of the aspects of taxation in most countries in the world is that you are taxed on your worldwide income.
Mhm.
Now, in Austria, you are taxed on your worldwide income without the pension. However, as of a year ago, they modified this to say that your pension is not taxed, but your additional income is taxed on top of your pension as if your pension were taxed, which usually means that your additional income falls in the high taxation rate instead of a low taxation rate. So you may be paying 40 to 50% on your additional worldwide income, although the pension itself is not taxed. And the local association in Austria, Retiree Association, or FICSA, is contesting this. The other change that they've made, which we think is even more significant, is that they have, or the finance ministry of Austria has made an interpretation that says the tax-free status only applies to those who have had a work relationship, i.e. to staff, former staff. Therefore, the disability and surviving spouse benefits are not tax-free. And we are fighting this heavily with the support of the Vienna-based organizations as well, because I feel that is first unfair, and second, it is a false interpretation of the headquarters agreement. So there is no move at the moment to actually tax a former staff member's UN JSPF pension in Austria, but they are looking for ways to get around it. In other countries, such as Switzerland, the pension is taxed, but it's canton by canton. Every canton has its own regulations on what kind of tax there is. Now, the association, I see a chat here, FAUS. No, it's AFUS, Association, et cetera, et cetera. And it's headquartered in the UNESCO building in Paris. I see another question here. What if the lump sum is received in a UNFCU account and spent from there? In such case, can the country of residence impose tax on your pension? We know of absolutely no cases where that has happened. The UNFCU is one of the favorite recipients or banks for your pension, and as far as we know, that would be perfectly okay. But talking about the lump sum in a country where the pension is not taxed, the lump sum is generally also not taxed. In many countries, though, like the United States, the pension is taxed and the lump sum is taxed with various different tax rates and tax situations. Sometimes the lump sum is treated as a capital income. So you really need to talk to a tax advisor in that country where you are going to be residing. As a small caution, we have heard of cases where people have, as an example, let's say they thought they were going to reside in Chile and had their lump sum put in a Chilean pesos account, but then decided they were going to live in Austria and transferred the money to a Bank Austria account, at which point the Austrian finance ministry said, no, that's not your lump sum anymore, that's just income. So be careful about where you transfer your lump sum. Okay. Maraschetti, anything at this point? You're muted, Maraschetti.
Sorry, Jerry. I just wanted to complement some information you gave about the lump sum. The question was very interesting. If I parked my lump sum in UNFCU and stayed in my own country and started spending it the way I wanted, is there any problem? It depends on your own country and the tax laws. For example, in India, the government mandates one has to declare all your external bank accounts and how much you have. So we cannot just take it for granted that we park the money there and use it. Yeah, thank you.
Okay. Yes, indeed. And I see a comment here about submitting your pension statement every year. Well, normally you do have to file a tax statement every year in the country of where you are residing, unless your pension is your only source of income. So yes, in France, you have to file your pension statement every year. In Austria, if you have any other income, you have to file your income statement and declare your pension. In the United States, you have to do the calculations on what portion was yours and what portion was submitted by the organization. Yours is not taxed and the organization's is taxed, and you have to recalculate that every year. As a US citizen myself, I have done that, and it's not necessarily straightforward because it includes an estimate of how long you're going to live. Okay.
Jerry, could I
Yes.
just come in? When it comes to the income statement from UNJSPF, of course, it is issued once a year, sometime in January, end of January, very rarely early February. And it's a calendar year financial statement of earnings. In many countries, when we are filing our tax submissions, they go for a financial year, not necessarily the same as calendar year. So it is advisable to keep the monthly earnings statements also, because the tax consultant might ask you for those months in a financial year. Thank you.
Okay. Denise, do you want to add anything?
Yes, thank you. About the statement of benefits, which is what we sometimes call a tax statement.
Mhm.
Just recently, we have enabled the functionality for you to request this document in your member self-service account. So under the Documents tab, there's a sub-tab called Ad Hoc Document Request, and you can choose to sign up for the statement of benefits once you're a retiree, and then you'll have the statement produced every year without having to request it every year. And there are several different time periods that you can choose from depending on what your tax requirements are for the 12-month period.
Mm-hmm.
So another good update to our member self-service. Thanks.
Great.
Okay. Wow. Okay. Very good. I did not know that you can choose different time periods. So obviously you reacted to some of the requests from retirees such as Maraschetti to get this additional information.
Yeah, Jerry, sorry again.
Mhm.
I'm always thinking about the spouses. After the death of the primary retiree, I'm sure Dennis knows very well that the MSS account of the primary retiree will be closed. However, the spouse can open her own or his own, MSS account, and therefore all the statements, everything will be completely in terms of old documentation, I'm sure will not be available, but financial statements coming as spouse benefit will be there. I think Dennis can clarify that issue more.
Sure, Denise, if you want to.
Yes. Yes, it's true that when we have a retiree who has passed away, the MSS account will be deactivated. When there is a surviving spouse or another survivor in receipt of a survivor's benefit, they will have a unique ID, the 9-digit number that the pension fund assigns, and they can then register with member self-service and have their own account and see their monthly payments under the disbursements tab and have the other functionalities available.
I think we're going to have a few questions for you. And thank you, Denise, for putting up under the chat the link about the statement of benefits. Great. That's very helpful. So 2 questions specifically to you that I see here in the chat. And the question said, what is the difference between separation and early retirement? And what's the best option financially? So maybe a short overview about what happens. What choices do you have when you're 60 years old with full retirement being at 62? There are a couple of different choices that maybe you could clarify.
Okay, thank you. I'm just looking at the question. So if your normal retirement age is 62, for example, and you separate from service at age 60 or before you've reached your normal retirement age, then your option would be depending on your age at separation. So in this question, the age is 60. So you're old enough then to have an entitlement to an early retirement benefit. And you also have the option of a withdrawal settlement or a deferred retirement benefit. So you have 3 benefit options that you'll need to choose from. And with the early retirement benefit, there's also a lump sum option. So we normally recommend that you run estimates and you see the different options depending on your separation date from service. And then you'll see the estimated amount of the benefit before you make a decision. So the question says, what is the best option financially? And how much do I lose compared with full retirement? Well, the best option financially, we can't really say because that's a personal decision. Your entitlement will be based on the date that you separate. And if you are not then working until your normal retirement age, it will be less than if you had worked till your retirement age. But what you'll see in your estimate is what you're entitled to. So you don't have to do any further calculations with respect to your retirement age. So I will link some more information about benefit options and understanding the differences, if that'll be helpful. Thank you.
Okay, thank you very much, Denise. The next question I will prefix with saying that the pension fund has been very, very thorough and accurate about getting pensions paid every month, regardless of where you are. And the question then comes on how are the payments processed in countries under sanctions, such as no SWIFT payments, such as Russia. I have known cases in the past where the treasurer of the United Nations has carried cash
Yes.
into African countries, but
Somalia.
yeah. Denise, do you want to make a comment on that? I mean, we're just very, very thankful that the pension fund does do a good job of making sure that these pensions get through.
Yeah.
Let's see. The question was, for example, such as Russia. Yes, so our payments section does make a lot of effort to try to get payments to our retirees, especially in a situation like this where it's been fluctuating from being able to send money, but then so much of it was being taken by the bank that we found alternative methods to pay. And we do update information on our website when there is changes, when there are changes like this about how we can pay. So yes, I think it would depend on the country. But for example, with Russia, I think the latest update was we cannot pay US dollars. We can pay in rubles to a bank account in Russia. I mean, otherwise our retirees would have to have an account outside of the country. But we update this as we're informed also from retirees that there may be new issues, and then we try to find a way to, or an alternative way to make the payments.
Okay, thank you. The next question in the chat raises an issue of health insurance. So let's talk about health insurance for a bit. Perhaps Sotirios can also add something on this as we go along.
Yeah.
But as an overall principle, there is no overall principle. Unlike the pension fund, there are some 30 or 40 different health insurance schemes throughout the UN system. These schemes vary in their coverage. They vary in their conditions that you have for having the health insurance. And the one thing that they all have is they have some kind of subsidy provision from the organization. And this has led to the fact that they all have outstanding debts, because the long-term funding for the subsidies is not insured in most UN organizations. So health insurance coverage for retirees is one of the things that we try to focus on to make sure that that coverage continues. In most cases in organizations, if you have worked for 10 years, and I know some organizations are now increasing that to 15 years, you have the right to continue to be subsidized after retirement. But you need to ensure that you have a method specified when you leave the organization for paying that health insurance. And normally the HR people in your organization would help you with that. And there is one very good option, and that is that you can tell your organization to tell the pension fund that the pension fund should deduct your health insurance before paying your pension. However, the question itself here about the health insurance is the cost of the health insurance included in the pension simulation? Is the medical insurance? Well, let's start with that because that's a question Denise can answer.
Okay, thank you. So when you run a pension estimate, you're seeing the gross amount. So what the amount is of your benefit. It will not yet include any deduction that you will have for ASHI. So you need to consider that you will be taking home less because if you are enrolled in ASHI.
Okay. I do know because I watch it every quarter for myself that when you look in MSS to see the quarterly or to see actually the monthly payments, it details that deduction for ASHI. So you see the gross amount, the deduction for ASHI, and then the final amount that's going to be put in the bank account at the end of the month. So that's also very useful. To the second part of that question, is the medical insurance rate the same in retirement as while active staff? Again, that depends on whether you qualify for having the subsidy continued. In general, as far as I know, yes, the rates stay the same. And they'll be adjusted every year. But if you qualify for the subsidy, then essentially you'll be paying the same amount in retirement as you were as a staff member. If you don't, then you'll be paying much more depending on the scheme. Some of the organizations pay 50%. Some of the organizations have a varying scale depending on what your grade was when you left. So,
Jerry,
Marchetti, yes.
thank you. Can I just compliment your answer?
Yes, certainly.
Of course, you made a very apt statement that if a staff member has contributed for health insurance for 10 years or more, automatically would be eligible that after separation or after retirement for the subsidy. But there is also a provision that if one has completed minimum of 5 years, some might have done 6 years, 8 years, in which case there is a provision for the staff member to request, your own organization that I will be contributing the subsidy myself until the cutoff point of 10 years. So when I become eligible. So there have been cases where staff members have, benefited. Thank you.
Interesting. I didn't know about that provision in New York or Vienna. But it must depend on the organization.
Yes, yes,
Okay.
yes.
The question from Mirta here, did I say that the pension fund can deduct the health insurance before issuing the pension statement? Well, yes, the pension fund can deduct the health insurance before putting the amount into your bank account. Denise, do you want to clarify that?
Yes, thank you. So to arrange your after-service health insurance, you'll need to contact your insurance provider in your HR office. And this part is not something that the pension fund assists you with. But when you enroll, I believe you give consent for your insurance premium to be deducted from your pension. Then your insurance provider informs the pension fund how much your premium is that should be deducted each month from your pension. So we don't calculate that amount. We don't know how it's derived, but we just have that amount that we agree to deduct and pay to the insurance provider or to the administrator. So when you look at your disbursements, you will see the total amount, and then you'll see the amount that you paid for ASHI, and then the net amount that you received. So again, in your member self-service account under disbursements, you'll see this monthly. So I think the main thing is that you'll want to be informed how you need to register, make sure you do enroll in time for your ASHI at your separation.
Dennis, sorry, just to prolong your answer. The limitation is actually 1 month, 31 days. So within that time, I think that's very crucial, and it's important for our FICSA colleagues to know. Thank you.
Okay. So Tirius, do you have any wisdom to add?
Regarding ASHI, I think you said it very nicely that every organization, the ones that have after-service health insurance, they are doing it probably in their own way. So there's no generic rule. My own organization doesn't have ASHI, for example. So it's not a given thing. So you cannot ask a generic question and get a generic answer. So as already Jerry pointed out nicely, you will have to check with your own organization, your own HR, how it will be done, if they deduct first or later. And I think, Jerry, you brought already wonderful examples together with Denise to answer that. But there is no generic way of answering it.
No. Thank you. Yes, I see a short question here. I'm 58 years old, 24 years staff. Do I qualify for the subsidy? Well, again, that's something that you have to verify with your organization. But I see you're probably from FAO, and FAO uses Cigna, and I know yes, you would qualify for the continued subsidy from that organization.
Jerry, sorry. One mistake we frequently come across among the retiree population in our association is that when the primary retiree with active health in subsidy or the insurance passes away, spouse is under the impression maybe, I'm just continuing, I don't need to do anything. I think it's very important to, reiterate that spouse also must register for the health insurance. Otherwise, it's not automatic. Thank you.
Yeah.
But this is not with UNJSPF, but with the organization where the primary retiree used to work.
Mm-hmm. This is an important point to say that even though you're leaving the organization still has some connection with you. and that you will occasionally, and maybe your spouse will at one point have to have contact with the organization to help facilitate things. So you never totally are separated from the organization unless you are not entitled to any pension or health insurance. Okay. Watsy.
Thank you, Jerry. I've really been blown away by all the stuff that's necessary for retirement. But I now wanted to talk about what you said about preparing and community and the personal side of retirement. I think it's really important when you said we have to prepare our mental and physical, and you spoke about creating a community. I was going to ask Marashetti and yourself to kind of talk us through, especially as men, because we know that men generally find it harder to sort of become retired because women generally have community and have activities. So I think it's really important, especially for those that are taking early retirement, not because they want to, but because they have to, given the financial situation in the UN. I think talking through the actual personal facing of retirement, because I don't think one can ever truly be prepared for retirement until it actually happens. Could you talk us through that, the actual adjustment to not putting on a suit and going into the office, the adjustment to not being a UN staff member. As Jerry said, you have no more special privileges, right? And you're so used to being this person. So could you talk us through that, especially from a male perspective? Because I think women have much more community generally. I'm generalizing. Over to both of you.
I'm still putting on a suit and going into the office. And I've only been retired for, I don't know, almost 20 years now.
Yeah.
So I didn't adjust. But yeah, these are serious issues. One of the biggest is of course, where am I going to live? Okay. I hope that's not me.
Not me either.
Okay.
It's okay. It was somebody coming in. Go ahead.
Okay. Yeah, there are three issues that pop up for me. One of them is yeah. Where am how am I still going to be active? When my father retired and said, I married you for better or worse, but not for lunch. So don't stick around the house. Go do something. In his case, it was golf that he chose as to get him out. And they moved to Florida so that he could do more golf. But this issue of where to live is so complicated because of the residency requirements. If you don't choose to live in your passport country, and that itself has an awful lot of psychological tension. I'm a foreigner here now. Before I was an official. Now I'm just an immigrant to a country, and then you have to cope with that. And with the bureaucracy that I mentioned at the beginning, bureaucracy in the UN, and then coming out and having to do it perhaps in a foreign language. We point out, well, I get one request a week, for example, that said, how can I move to Austria because of the tax-free status? And the first thing we say is that the tax-free status is not sufficient to be a reason to move to Austria. The second thing we say is you will need permission. And the third thing we say is you will need German. It is a requirement here. You must have at least A1 level. So you might be getting into language courses in order to qualify to even live. You can't just choose a house someplace and live there. The second issue is community. What am I going to be doing here? Depending on the country you're in, there are a lot of ways that you can stay active. We urge people to get involved in some kind of a voluntary work to stay active, whether it's helping out in a hospital or picking up unsold food to take to a charitable organization. In Vienna, there are approximately 150 different NGOs and charitable organizations that you can become a member of. But you might want to live out in the countryside in wherever you are. I was in Thailand a year ago and took a trip out into the country and met an American there who had retired from being a security officer in the UN and said he was very happy living out in the country in Thailand. So there, but it's a choice. It's something you have to think about, and it's better to think about it than just to let it happen. And then mental and physical health. Yeah, even me as an old nerd and computer person had to start exercising and taking walks. Whatever health you have isn't just going to stay automatically. As you get older, you have to do more and think more about it. Mental challenges, well, that's why I'm here today. This whole pension business and retiree business is a mental challenge trying to keep up with it. Okay. Marusheti, what would you like to add?
Thank you, Jerry. You have covered a wide spectrum of issues. I would like to dwell more on the social and the community aspects. Based on our experience in the country, and I presume there are similarities in other countries as well. The very first thing is that when you separate or retire, agreeable, there is no office to go to. But literally every country has a retiree association. There are 65 retiree associations where you become a member, jump in, bring your spouse also, so that the association is part of you and you are part of the association. Now, the reason I mentioned about the personal experience here is that at 55 or 60 years or 62, most of your children are not little anymore. Either they have graduated, they have got good jobs, not necessarily working in the same country, but somewhere else. Like in our case in India, most of the retirees who are members of the association have their children either in the US or in Europe. So we are left with husband and wife, or unfortunately, sometimes only the spouse, or, accumulating the ages. I am 70 now, 72, 75, but it's not a numerical increment. There are community challenges. Our experience has been that as long as the association is integrating everybody as a family, you have a responsibility as an association. If there is a bereavement in one of the members' family, you go there and you will soon realize children are very far away, nobody is there. You may have to help plan even a funeral. Not only that, when it comes to members of the association who are in the bracket of 80, 85, 90, new challenges have come in. Get a telephone call. UNJSPF has rejected my paper certificate of entitlement because my signature does not tally. Well, to get a thumb impression, how can the association help? Of course, UNJSPF has been very considerate, giving advice as well. But then there are people at the age of 85 have started to develop dementia. Very recently, I visited one of the families because the person called me, can you come home? So I went there. Then casually, I checked with this lady who had lost her husband 3 years ago. Are you getting your pension every month? She said, what? Am I getting pension? You should be knowing as association. I said, no, I mean, this is a monetary issue. Association does not keep track of your personal pensions. And then the person had forgotten the name of the bank as well. Well, there are these situations and, realities one will have to face. So when you separate or retire, I think the first option should be, of course, you don't go to office, but you have an inviting association where there is a family members away from your own family and you get integrated. I think that way, I mean, I really support what Jerry said. That not necessarily just playing golf or maybe some other sports is the aim or the goal, but you need to also think about your own communion and how you can help each other within the association. Thank you.
Thank you, Marachetti. Yes, to put it simply, FICSA, as the umbrella organization, is there advocating for your pensions and your health insurance in general. And the associations are there specifically to assist each of you in the region. And it really is a community effort to build one of these associations and to be a member of the association. I know these days that there is a tendency for fewer people to actually get involved and volunteer to participate or to lead these associations. That's one of the issues we're looking at. That seems to be a society thing right now. I'm more interested in me and not in the community, but you have to have that community in order to thrive and to maintain your well-being. Okay. Can I turn back to a couple of the questions that I see in the chat here? The last one I think is fairly clear. If you're going for a deferred benefit, how does the ASHI get paid? Denise, do you want to answer it? I mean, the answer is fairly straightforward.
Yeah, straightforward.
Well, if you're not in payment yet, then I'm assuming you're making the payment directly by yourself.
Exactly. Yes. If you go for a deferred benefit so that you are not getting a monthly benefit from the pension fund, then you have to make arrangements for how your ASHI contribution would be paid. And that's again a time when you should get some advice from the organization where you are separating.
Yeah.
The other question I see there is if you are in a situation where you are still allowed to withdraw, make a withdrawal settlement, and then can you start another contribution if you get a new staff contract in the future? I think the answer is yes, but I'll turn it over to Denise.
Thank you. I'm not seeing the question, but if it's just as you stated, then yes, if you take a withdrawal settlement when you leave employment and then you are rehired and you're again a participant in the fund, you will start a new period of participation.
Correct.
And you can restore that withdrawal settlement, meaning you pay back the money that you were paid out as a withdrawal settlement, plus some interest. And then you can restore all those years of contributory service into your new pension account. And then when you separate, you might be entitled to a retirement benefit if you, for instance, didn't have 5 years of service the first time.
Okay, thank you. Yeah, that's the way I read the question here. My network is fluctuating because I'm in the field. Well, my network is fluctuating and I'm sitting in Vienna. So there's something going on here today. Okay. Okay. Yeah, so I'm not seeing any further questions at this moment, but perhaps we want to talk a little bit more about the issue of choosing where to live. I mean, my parents had moved to Florida and had then passed away, so we had an empty house. So when I retired, I thought I might try living in Florida. And I tried and found out that the people had changed in a way that I had not changed, or I had changed in a different way. The people were very polarized. And of course, you probably can't imagine it, but with long hair and peace and love, 1968, that was the first time I left the States. So it's been a long time since I've been a resident in the States, and there's been an awful lot of polarization since then. So in Florida, I found I loved the nature and didn't love the people. So I came back to Vienna where my community was, and then got involved in FICSA and then in FICSA here. Also involving in church, any kind of musical talents that you have, very good for the brain up here as well. Wadsy, you want to add a little bit of wisdom?
I think, Jerry, this has been, I mean, I have learned so much from this conversation. And I think what's important for people to know is that please join your staff associations while you're in service. so that you get as much information as you can from your staff associations within service. Because then, for example, for us at FAO, we then joined the FFOA, the former, I don't know what FFO stands for, unfortunately, but we joined that, which is part of FAFIX. It's an umbrella to FAFIX. So what's really important, and the reason we're having these information sessions with you is because we know some of you are having to take early retirement. And so we wanted you to be informed about what that entails. The big thing, as Jerry said, and Marasheti, is that as we are part of the common system is not that common. So some of you will have after service health insurance, some of you won't. It's very important that you speak to your HR and find out what your entitlements are. It's very important that you ensure, especially for the pension, that you know how to get into the member login. Run your pension calculator. I run it every year just to find out how much I'm making or how much I will lose or when I want to, when I want to retire. Just get comfortable with the mechanics of running, of getting into, of logging into the member login. You will not have any disbursement tables, of course, because you're not on pension yet, but you can check every year for how much your pension is now. You get a statement, I think, every May. And you can run the pension calculator. One of the things that we do have as International Civil Service is a very healthy pension. And so this is one of I think we're only 10% in the world which has a defined benefit pension.
Yeah.
I met with Rosemary McLean yesterday, and she says this is something that our staff need to celebrate, that we have a defined benefit pension. I think one of the things is to attend a retirement seminar at your organization. I attended one as soon as I got into service to plan. I think all of these things are very important, and we're having these sessions so that you are informed and you can plan. So a lot of these things, and remember, we will not be part of the organization once we are separated. So ensure that the pension has your personal email address and not that of the UN, because you do leave. It's very important that your email address for the pension is a private one. Another thing is to update your beneficiaries. A lot of people, when they enter the system, have children under 21. And then when you leave, your children are over 21. And if you have not updated your beneficiaries, they may not be entitled to any part of your pension because you didn't update them as beneficiaries in the pension. So all of these things are very important to note. As you know, I'm an advocate for your mental health and well-being.
Yes.
So, really, community is really important for mental health and well-being. And I'm going to hand over to Soterius because we need to also talk about disability inclusion, because the pension has, one of the things that Rosemary told me yesterday is that because of the situation that we're going through, the number of people who have applied for disability has gone to 134 in the system this year. So this is for mental and physical disability. And this is one of the areas, maybe Denise, you could slightly touch on in terms of disability inclusion, because we have one of these pensions that can provide disability benefits as well. So I think these are some of the areas that staff need to be informed about, need to get up to date with. And this is the reason we're having these conversations. And I hope you've asked all the questions you want to ask. We have these two libraries here of information. You know, Jerry and Marashetti are a library of
Oh my
information.
God. Thank you, Vachi.
You know, and so it's really important that you ask the questions while you can, and of course this conversation will be up on the FICSA website. But we're having these conversations to help. So ask any of the questions that you need to know, anything that you're having sort of anxiety around. Ask them today so that you get the answers from the experts. Over to you, Denisa and Soterius.
So
Vachi,
maybe,
can I
yes,
just
please.
add
Yeah.
one point as a compliment to your statement? Thank you for inviting active staff members who will get separated or maybe retired to come into the associations. One option available with most associations that active staff members can also become members of the retiree association as associate members. And when they retire, they automatically become full members. So I don't think there is any issue there. That's one. And secondly, uh, Jerry did touch upon lump sum. And there is one element I wish to bring up because maybe some might know, some might not know. If the primary retiree has taken a lump sum, naturally, the pension is a reduced pension. When the primary retiree, demises after the death, when the spouse applies for spouse benefit, it's not going to be a reduced benefit anymore. It will be 50% of the full benefit. I think it's very important for people to understand this, provision. Not many might know. Thank you.
Soterius.
Dennis might want to elaborate on that.
Yes, Jerry, we have some questions in the chat. So we will have to answer them, but maybe first we discuss or we speak a little bit about the disability part that Watsi brought up. So maybe Denise, you can say something about colleagues who get a disability pension. I will speak then a little bit from my perspective about the kids who have a disability, dependents, if you're so kind.
Okay, Denise?
Okay, thank you. Okay, so for anyone who's a participant in the fund, as long as you were medically cleared, which we assume you all are, you're covered immediately for disability benefits. So this is something that applies when you're an active staff member. So just generally speaking, in the UN family, we have reviews twice a year, and we look at cases where the staff member has been on sick leave for an extended period of time, has used up most, if not all, of their sick leave on full pay, and the prognosis does not look promising that they'll be able to come back to work, at which time then, usually in conjunction with HR, the case is put forward to the pension fund to review for disability. And if approved, the staff member still has to exhaust all of their leave entitlements. So all of their sick leave entitlement and their annual leave entitlement. And then they're separated. And from the following day, they're entitled to a disability benefit. The disability benefit from the pension fund is a monthly benefit for life. In most cases, I mean, I should clarify that. It's a monthly benefit. Once it's been approved for life, then it's payable for life. But oftentimes when it's first awarded, there will be a review period set. So maybe 5 years later or 2 years later, depending on the condition. Then the medical reports will have to be updated and submitted for the review. Once you've been awarded a disability benefit from age 55, it's generally then awarded for life. The amount of the disability benefit is what you would have received if you had worked until your normal retirement age.
Yeah.
If in the rare occasion you actually improve enough to be deemed no longer incapable of working, and the disability benefit would be stopped, and you would then still have all of your pension entitlement that you had accrued up until the time. So we have had a couple of cases like that, but not too frequently. I think the main thing is to, yes, be aware. Most of the time this does get submitted by your employer in conjunction with, you and the medical reports. But if your employer is not submitting this on your behalf, you can still come forward on your own and request a review. And I think maybe that's enough for now, and then I'll pass over to talk about the child's disability benefits. Yes, thank you.
Thank you, Denise. Yes, the topic is pretty complicated, and I'm sure you could have spoken much longer to explain all the details, but it's a very good overview. I just want to go at one small detail for everybody who might have kids with disabilities, dependents with disabilities. I have a certain specialty there because I have an additional role, not only serving with FICSA as chair of SOCSEC, but I'm the president of the UN Disability Inclusion Network here in Vienna, which is an association of staff who are affected by disabilities, either directly or through the dependents. And in that context, we had analyzed the situation of having a child with a disability and then going into pension ourselves, what will happen in the future, and especially one subtopic, what happens if the child becomes orphaned at a certain point, because we don't live forever. The first part of going into pension and having a child with a disability is rather easy, because then you're still alive and you can still coordinate everything with the HR of your organization. There are certain steps, it takes some time, but then your child will be getting a certain pension as well, certain amount, while you're alive, actually. We were concentrating on the part when we are not alive anymore, what happens then? Because what a lot of people don't know, your child affected by disability has a right for a pension when it's orphaned, and that pension will be even higher than what the child is getting before. There's a certain calculation which is described in the rules of the UN Joint Staff Pension Fund, a very complicated one, because it took us a long time speaking with the colleagues there to start understanding how the calculation works. But the child is intended to get more. So the main thing is then what we were thinking is that the problem, who will take care of that? Who will take care that this is done correctly? Because I'm sure the colleagues from the pension fund will do their best, but somebody has to inform them that you're not, that the whole constellation is like that. And what we can offer as this association of staff affected by disabilities is that you register with us, and we keep a kind of table, we keep track of you. And, if the situation happens one day that the child is orphaned, we will try to get in touch with the organization and the pension fund to see that everything is done correctly. So that's the only thing that I want to add there. This is something rather new, so it's not big advertised, but Watsi gave us now the opportunity to bring that up. So we all have to work together in these things. Marochetti said it nicely, you need to be a part of an association when you get into pension. That's always a good idea, because we can help each other. And from the disability point of view, we will be doing our part. So that was what I could add there. Maybe I will hand back to Jerry, because we have some questions in the chat that we couldn't answer before. So if you're so kind to go through them.
Thank you very much, both of you, or all three of you. Before we go back there, I want to make one overarching comment about these things about disability and also about spouse. Please take care of these issues before you are separated. It makes it so much simpler. If the disability has already been approved by the pension fund before you go into separation or retirement. And if you are living in a partnership and consider the possibility of marriage or a registered partnership that is appropriate in your country, do it before you retire. Because if you make this formal commitment after your retirement, your spouse is not entitled to the 50% continuing monthly benefit. Any of these issues about disability or the state of your family, in that sense, should be taken care of before you separate or as you separate, rather than waiting till afterwards. So for those of people who are getting 3 months notices, that's actually a fairly short time to get these things taken care of. Okay. I would like to go back now to some of the questions that are sitting there. There's been a question about euro to dollar fluctuation that brings up the issue of two-track. And again, I always get these questions. I'm sure Marachetti does and the pension fund does. Should I choose dollar track or two-track? Well, I will give my 2 cents before giving over the floor to others. The purpose of the two-track system is to ensure purchasing power in your country of residence. And you can certainly change your residence, and then it will be adjusted for purchasing power in that country. It provides stability in the purchasing power. I chose two-track when I retired because I did the calculation and said, yes, I can live on this much money. And that's then an assured amount, and it is cost adjusted for Austria because I'm in Austria. If I had stayed with the dollar track, I would have perhaps gotten more money over the years. My pension would have been higher. But as it was, I made the calculation and said, this is what I live on. I don't want to take the risk. And therefore, I chose two-track. If you want to take the risk and convert your dollars into euros or pesos or whatever, then you stay with the dollar track. And you have a one-time chance to change from the dollar to the local two-track. And that's just part of the rules. And in general, you cannot change back. So my consideration when I talk to people has always been, what do you need to live and enjoy your life? Are you willing to take the risk that this money might go down, and you might benefit from it going up, or are you a rather conservative person and you just want your cost of living covered? Okay. So,
Jerry, could I compliment on the two-track? Yeah. Thank you. One or two issues for information. I'm sure Dennis is full of the procedures and the information. Even if you don't opt for dollar track or for the local track, the first thing that will happen is that once you get separated or you retire, you will continue to get money in the dollar track because that is the US based system and therefore it will continue. But there have been cases that I have come across who have, even before retirement, from the very first month of the benefit or the pension, the second month of, they wanted to go to track. And it is still possible, but one has to, work at least 3 months before or 4 months before all the requirements that are needed. I'm sure Dennis can elaborate on that. The third point, which is also important, as Jerry mentioned, you could switch over to the double track or the local track anytime. But once you switch over, normally you cannot come back to the dollar track. Yeah, that's one. And additional information is that if the primary retiree was on the single track, after the demise of the primary retiree, the spouse has an option to apply for a double track and it is allowed. I think this piece of information, I'm sure Dennis can elaborate. Thank you.
Before going to Denise, I will just note the time. We're almost at the end of the regular time session. We're almost at the end of the regular time session, so I have no problem with continuing for, let's say, 10 minutes more, but we are approaching the end.
Yeah.
Others? Yeah. Okay. Okay. Good.
Okay, from my
Denise, do
side.
you want to say anything quickly about the 2-track? There's a lot of information out there on the.
Yes, and you're all in luck because next week we have 2 sessions, global
Mhm.
town halls on the 2-track.
Wow,
On the
great.
12th of November, it will be in English, and on the 13th, it will be in French. I'll link in the chat the website page where you can access the seminars that on that day. You don't have to pre-register or anything. And it would be 3:00 in the afternoon, Geneva time,
Geneva.
9:00 New
Good.
York time.
Great.
Okay. Thank you. And there are booklets and videos out there
yeah.
already on the website as well. But it is something that you do have to consider and either choose the 2-track or choose not to choose the 2-track. Okay. There's a question I think we've answered now. Is there any benefit for a handicapped son? Yes, but you should register and go through the process of making sure that your organization and the pension fund know about this handicap, if at all possible, before retirement. What is the process of pension entitlement for single staff members without a registered spouse with their organization? I'm not sure I understand the question properly. You will go through a separation process, and as part of this, there are forms to fill out that specify what your choice is for pension. And this has nothing to do whether you're a single staff member or with a registered spouse. You will be asked to specify your dependents and any residual beneficiary, and there are various options for that. Yeah, Denise, do you want to say anything specifically about the separation process?
Well, that's a very important one, and we do have a page dedicated to separation, which I will also link in the chat. That some organizations have requirements that you provide the documents to them and they forward them to the fund. Others allow you to upload your own documents, your payment instructions and supporting documents via member self-service document upload, which is the most convenient because then you have a record of it and it reaches us immediately. But I will link that there if in the, in respect of the lack of time. So hopefully that will get you started on looking into all the steps in separation and receiving your pension.
Very good.
There are several administrative questions here about sharing the recording and having the link. I'm sure FICSA will be providing those. Could we have this session in French? Avec moi? No.
Oui, je parle français.
But perhaps with other experts. Let's see. If someone is 52 and the retirement date is 58, is there any pension? You want to continue with health insurance, the staff percentage and who percentage to pay over the cover 6 years until the so once again, I think as Denise said, if you are below your normal retirement age, you have the option of withdrawing or deferring, or to perhaps, if you're close enough, paying early retirement. But if you are deferring and not getting any monthly benefit, then you have to arrange with your former organization, looks like WHO here, to how those payments are going to be made by you. And as to the question of the staff percentage and the who percentage, I can't answer that because I'm not from WHO. And they would be the best ones to be able to answer that question. If you've separated after 10 years of service and not yet due for retirement, what are the options? Denise, you mentioned some of those, but you have an entitlement, so you have a few different options. But then the second part of the question is, we have colleagues in various organizations on short service agreement contracts. What options do they have? And I don't know.
Yeah. Well, one of the requirements to participate in the pension fund is that you have a staff contract. So if this is a special service agreement, like a contractor, unfortunately, there's not any possibility to have pension participation during that type of contract.
But for the person who has been a staff member for 10 years, there are various options that the person can choose and is not yet due for retirement, not reached the normal age. Yeah.
Yes, and if you see, I've linked the benefit options page, which I hope will be helpful. You'll have to base everything off of the date of separating from the pension fund. Mm-hmm. To know what your entitlements are for pension.
That's okay. From Kenneth, I think we just addressed that question. Yeah. Okay. 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 So, if you will, I will share my window again. I will. Here are some of the basic contacts. Okay.
Excuse
me. FICSA@un.org. I've taken this
Jerry,
from the website.
Jerry, I can't see anything shared. Are you sharing?
It says I'm sharing.
I can see the thank you page. Yes.
I can see it too.
Oh, okay. So maybe it's just me. Sorry. I found it. Thank you.
So, Jerry, are you still with us?
He looks frozen.
Oh.
He said his network was wonky.
Yeah.
Yes. But
I
can
think we
still-
lost him,
Okay, how are
Sotirius.
you?
Go ahead.
Okay. So, we have reached now the end. Actually, Jerry was so kind to do more, and we were staying a little bit more in the call because there were so many wonderful questions. It was a very informative session. So we want to thank Jerry, President of FAFIX, and of course Marachetti Sinapa for the wonderful contributions. Denise, thank you for your insights from the UN Joint Staff Pension Fund. And I want personally to thank, of course, Watsi, Ivan, and Marie-Paul for getting all these things together so we could have this wonderful session. As you heard already, there will be a recording, and Watsi, I believe you already placed it on the chat, the links for the recording for everybody to see. So I'm afraid we really lost Jerry, but it was a wonderful session. And from our side, from the side of FICSA, we want to thank everybody who contributed and everybody who was here now to be a part of it. Thank you all. Have a lovely evening, morning, wherever you are, and see you next time.
Just
Thank you.
Sotirios, just one
Yes,
question.
please.
Someone is asking to have Marachetti contact email address. Is it possible, Marachetti? You agree? I can't hear you.
Yeah, I'm happy to share my email address. Sinapa, SEENA.
No, I will put it
Can I?
directly. Yeah.
Yeah,
Okay.
yeah.
So if you, I just want
See,
you to.
it's sinapaunicef@gmail.com. Sinapa with double P. Sinapa UNICEF, one word.
I have it. Okay.
Yeah. While all organizations ask us not to use the organization's email, I found my own way of keeping my organization as part of my email. Thank you.
Thank you. Just Marie-Paul, people are asking how to get hold of the people. Please go through your staff associations and then allow your staff associations to get contact with FICSA. Remember, FICSA is the umbrella organization for the staff associations. So please go through your staff association to get hold of FICSA. And a lot of information is available. Oh, something is. A lot of information is available on the pension fund site. And if you look on the pension fund, you can find out how to contact the various people in the pension. But please read all the links. The pension fund has town halls every month, I think.
Yeah, almost.
Yeah.
On
27
various
now.
topics. And you can watch the recordings. Marie-Paul put the list of recordings we have. We've done a lot of recordings this year on various topics. So please look at those. And we are really grateful that you stayed so long and we had such active engagement. And from Sotirius, just to honor everyone, thank you so much for attending. And in terms of the French, we will ask FAFIX again if we can find members who could do the same webinar in French. And we will respond to you after arranging with FAFIX because we don't know. We cannot say yet.
Yeah. At the
Over.
beginning.
And
Yeah.
Marie-Paul, over to you.
Yeah, at the beginning of the meeting, Jerry was mentioning this RFU, AFUS hosted in UNESCO in Paris. So it's quite similar to FAFIX.
Yeah.
They speak French. So there
Yeah,
could be
yeah.
also the possibility for them to
Sure,
present
sure.
this kind of session in French. This is it.
Yeah.
Mm.
Yeah. I'm sure we'll pass on the message to Jerry.
Okay.
Yeah, Jerry is frozen. Looks like winter has started a little bit early in Vienna.
Okay, yes. Thank you so much. Thank you.
So thanks
Have
to
a-
all participants of FICSA. We love you all. Thank you. Great.
Wonderful. Thanks
Thank you,
all. I
Jerry.
think we can close it. Thank you. Bye-bye.